Hello, and welcome to episode 2 of the New Trader's Playbook. Today's episode is titled Trading Terminology and Buying and Selling. So, now that we have talked a little bit about the anatomy of a candle, we have an idea of what makes a candle and what's a little bit more important when understanding how to look at the market. Now, we're going to talk about some basic terms that I think are pretty important just to get your foot into the door so that you can start to look at the market, maybe start to understand a few more things that you're seeing. So let's start right off with some of the big terms that you may have come across already, but are definitely things that you're going to want to know. So let's start off with a very simple one. What is a stock? So maybe you have dealt with stocks before, maybe you have some, but essentially a stock is just a piece of ownership in a publicly traded company. So we're going to take a look today, something a little bit different. So we're going to be looking at what is called TradingView. TradingView is one of the leading in the industry for people who want to trade, want to test their trading, want to do what we call back testing, which we'll talk a little bit more in a few more episodes. But it allows you to see the market and to kind of get in and say, okay, well, I want to know, what can I do? What can I see? What kind of things can I possibly capitalize on in the market? So what we're going to take a look at is a couple of examples of what you might be able to trade in the future, or maybe you have already. So as I said, stocks are some type of publicly owned company that of course you can buy into, right? So maybe you own some stocks yourselves, and maybe it's something that you think is going to go up in the future, right? So as we talked about in the last episode, if you are a swing trader or an investor, that means that maybe you think that you want to buy Apple or Amazon or Meta or Microsoft, Netflix, whatever it is, and you believe that price is going to go up. So you're going to invest in one of these stocks. There are many other things. We've got futures, we've got which is what I personally trade, and they're kind of a combination. For example, this one product represents the entirety of the NASDAQ, but we'll talk more about futures in the future. So we've also got Forex, which if you've ever heard of that, they are foreign exchanges. So as you can see, they are just comparing two different types of product, like the euro versus the US dollar, and how those two move in conjunction with each other. And then of course, everybody knows about Bitcoin and crypto. So all of these are products, not just stocks, but all of these are tradable products that you can find on something like TradingView in order to see what price does, how does it move, how could I capitalize, how could I trade if I wanted to get into trading the stock market. But for today, we're going to stick to looking at this one, which represents the futures version of the S&P 500. So with that in mind, you have what we call a ticker. So all of those things that we just looked at are the stock letters that represent said business. TSLA, Tesla, AAPL, Apple, etc. Now the equity that you have is the value of shares that you own. So let's say, for example, you have some, let's say you have some Apple, right? And right now, currently, price for Apple is trading, it's before market, so price for Apple is trading somewhere around $260. So you want to buy Apple product and you say, I think that Apple is going to go up. I think it's going to increase, so I'm going to buy it right now. And when the product, let's say it goes all the way up here, that is $6.73. So if you hold and then you decide to sell it here, that would mean that you would have made $6.73 off of your purchase, and your equity at the time would have been $259 if you bought one share of Apple, for example. That would be, as mentioned, your equity, what the value of all your shares are. Now, if you had 100 of those, then of course the value would be $2,500. So your portfolio is an example of your investments. It can either be individually owned or group owned. So if any of you have a 401k, that would be an example of what is inside of your portfolio. So you may have multiple different products. You may have multiple different stocks. You may have funds and things like that. That all represents your personal portfolio. Let's talk a little bit about some terms that you are definitely going to see. The terms volatility and volume kind of are similar, but just a tiny bit different. So volatility that you're going to see means the degree of variation in price. So if you have ever looked at a stock and you've noticed that sometimes there are small candles and sometimes there are big candles, as we can notice right here on this Apple. These right here, tiny, tiny little candles, right? Followed by these big, big, giant candles. So that would be an example of, we've got some volatility, some lack of volatility here, followed by quite a lot of volatility right here. Interestingly enough, oftentimes it does correlate to the other thing that we're going to look at, which is volume. This is an example of how you can find a lot of very cool indicators and can put them on a chart. So I'm going to add volume to this chart, And as you can see, the higher volume, which we'll see here, means the total number of shares traded at one time. How much activity is happening inside of that here 1 hour candle. So you'll notice this big giant candle here had quite a lot of volume. Now, does that mean that every single time volume is big, the candles are big? No, oddly enough, it doesn't. But most of the time, you're going to see some small volume with small volatility, big volume with big volatility. Right? So that is standard. A lot of people use volume on their charts. That's not, of course, necessary, but it can sometimes tell you whether there's a lot of buying or selling getting into the market when you are getting into the market. Now, let's take a look at some other terms. In the last episode, we talked about bullish candles, which are green, and bearish candles, which are red, if you remember. But the reason why those terms are so interesting is because they also reference, usually, a direction. So if you ever have heard them talk about the bull market, usually what that means is that the market is trending upward, it's rising. Now, there's something really important to understand when it comes to a bullish market or a bearish market. Now, those types of markets are not just what happened in the last couple of hours. For example, if you look at this chart, remember we talked price is fractal, so everything works the same way, but it may not be the same when it comes to smaller time frames. So we're looking at a 1 hour chart. Now, you see price here from 2 a.m. on Wednesday down to 1 p.m. on Wednesday. Price went down. Yeah, sure. We can say that price was in a downtrend. It was moving. It was bearish. But does that mean that this is a bear market? Does that mean this is a bull market? Well, no. In order for us to really be able to see that, we're going to have to take a look at a higher time frame. So instead of looking at a 1 hour, let's take a look at our daily chart. So if we look at what has happened, we'll pull this over here. If we look at what has happened with the S&P since April, what do you think? Are we going in a bear market or a bull market? Well, obviously, since we are going up, we have been seeing a major bull market ever since we got here at the start of April. As you can notice, there are ups and downs though, and that's what's really important. There are moves in both directions regardless of the trend. Yes, this is a bull market, but what do we see inside of this bull market? Here we see some pretty decently sized, what we call pullbacks. So you're going to need to know the term pullback because it essentially refers to when price goes in the opposite direction so that it can do a balancing act. Pullbacks happen nonstop. They're always going to happen, and they're actually usually a really good place for people to get into trades. For example, you don't necessarily want to buy at the top of the bull market, but maybe if it allows you to get in on a pullback, maybe we get a better price to get into said long. And remember, price is fractal, so this concept right here, even though this is a daily chart and it does tell us that we are in this bull market when it comes to this product, that doesn't necessarily mean that every day we're going to be trading upward. For example, if we go back, we see a lot of movement, right? This right here, huge down move. Well, that doesn't mean that we couldn't have traded in that direction, but it does mean that the higher time frame is telling us we're heading up, right? The higher time frame says, look at where we're going. Look at where we've been going since April. Maybe it's a better idea not to assume that price is all of a sudden going to come down here, but maybe to get in line with direction, bull markets, bear markets. Important things to know, up or down, rising or falling. Now, we're going to take a look at some details because one of the things that you're going to need to do if you want to start your journey with learning how to trade is you're going to have to actually start doing it. And as I mentioned before, TradingView is one of the best locations that you can possibly do that. So if you are interested in taking a look at a TradingView account, feel free to check the information underneath this video and you'll see a link to TradingView. You'll be able to use that link not only to get you over there, get you a free version of this, but also if you decide you want to get a subscription, if you use the link that's in the information for this video, then you'll actually be able to get $15 off of your next or second subscription that you get. So I have had TradingView for years and I can say that it is one of the best parts of my trading. So I definitely love TradingView for so many different reasons. So let's take a look at a couple of different things. There's some terms that we need to know when it comes to being able to trade in the actual market. So number one, buy. Of course, buying, also called longs, means we want price to go up. If I am going to get into a trade, I want price to determine which direction I think price is going to go. So if I am going to buy, which you'll see these little buttons up here will allow you to buy and sell. If I'm going to buy, then that means that I think that price is going to be headed up. Now, if I want to sell, I think price is going to be headed down. Now, whenever I get into a trade, it's going to be what we call an execution. So that is a completion of a buy or a sell order. Now, some examples for you would be that let's say that I thought current price right now was going to go down. Well, I can simply just put a sell order right here, and price will continue down and take my order, pick me up, and then go to whatever location that I want. Now, the important part about understanding what that means is that we are paper trading. So you'll see it down here. This will allow you to paper trade. And the cool part about paper trading is it doesn't cost any money. You don't have to invest in a broker. You don't have to put any money anywhere, but you can test your skills in the market without, having to risk anything, which many traders will tell you. Hopefully all traders will tell you that the most important thing that they did was spend a lot of time paper trading first. No risk, but you get to learn quite a bit about the market and about yourself. So what we'll see as we look at this paper trading idea is that there are a few different types of of orders. Our first type of order here is going to be a market order. So that's going to be instant. As I mentioned up here are some buttons. Now, the buttons will allow you to instantly get into a trade, whether that means buying or selling. So let's say that I think that price is going in a direction and I really need to get into it right away. And I don't want to wait. I don't want to set up an order. Let's go over to NASDAQ. That'll probably be moving a little bit more right here. That's pretty early, so let's take a look. Maybe I think that where we're at right now, price is sweeping those highs, so I think we're gonna go down. So I'm going to instantly pick up the order. Right then and there, done, okay? Now, these two buttons represent two really important things. The SL, which is your stop loss. Now that is essentially the way that you're going to tell the market, this is as far as I think price should go against me. My mentor always told me that if you are wrong, that is where you want your stop loss to be. So wherever you think wrong is, that's where the stop loss goes. So let's say that we put the stop loss right here. As you can see, it's telling us how much money it is worth. You can change that either to dollars or ticks. Ticks can often be a whole lot better, but let's take a look at the other one, which is TP. This is your take profit. So let's say I think that price should go all the way down to here. Now, as you're seeing, you notice what's happening here. I've gotten into a trade. I have a location where I think that the trade is no longer valid. It's invalidated. It shouldn't work. It shouldn't continue to go down. And that is where I'll put my stop loss. And on the other side, I have a location where I believe, according to price, that we should come back down to and get to and touch, okay? So that is how you're going to take your trades. You're going to enter at a location you think is a good place for entry. You're going to have a stop loss at a place where your idea for it, in this case going down, your idea is wrong, and you're going to have a take profit at a location where you think price is most likely to go. Your take profit can be anywhere. We'll learn over time in this series how we can better choose good locations for entries, for stop losses, for take profits. But all of that being said, this is one of the most difficult parts of trading, but time. Practice. And that is why paper trading is so good, because as you can notice, if this is a losing trade, that's $600. Well, I don't necessarily want to lose $600. So I can simply do it on paper trading and get the feel, get comfortable, and then over time I can make the decision to go with a brokerage or a prop firm, both things that we'll talk about a little later. Let's say I want to close my trade right now. I can push this right here, or I could also bring my stop loss into profit, which means that the stop loss, let's see, it says $20 right there, so that means the stop loss is now in profit. So if it pulls back and it hits us, now we have officially exited, and that was $20, for example. All right, let's go back over to ES and get our list again. So, most important things, stop loss. Always trade with a stop loss. As I mentioned before, it is the most that you're willing to lose on that trade, and it also should be in a location, specifically, that you believe your idea, price going up or down, your idea is invalid. It doesn't work anymore. It's not going to go in the direction I want, so I need to exit this trade. Stop losses are extremely important, and I'll say this once and hopefully probably a few more times. Never, ever, ever trade without a stop loss. Okay, this is huge. This is a key. People lose all of their money when they do not trade with stop losses. So before we get into a trade, we have to make the decision, where do I think that price is invalid in my trade? We are not going to trade without stop losses. And then, of course, as mentioned before, the take profit is the location you expect price to reach. Now, are we always going to be right? No, of course not. We're not always going to be right. But the more we practice, the more we take trades with our paper trading, the more we're going to find that price does like to do very common things, and we can capitalize on those common things. As I mentioned in the last episode, the market is not random. Everything is run by the algorithm. So this will give us a really nice idea of some of the basics. So hopefully now you have a little bit better idea on what do these trades look like. As we mentioned before, we have our market orders, which can instantly get us in. And then we just have two other types of orders, which are limit orders. We can set those for reversals, or stop orders, which can be set for continuation trades. I'll give you a quick example of this. If I think that price is going to come down to right here and then turn around, I might want to come here and put in a buy order. So you notice how it's a buy limit, which means that price would come down. Say price did something like this, right? And then it comes and it hits me. And then I hope it does like this. That would be a limit order. I can also set my take profit so I can see what kind of amounts I might be dealing with. This would be an example of a buy limit order. Same thing, of course, would happen the other direction. Maybe I think that price is going to come up to here and then fall. So my stop loss goes there, kind of like what we saw earlier. Take profit goes down here. Now I have something set up so that maybe price can do this. Maybe it goes a little higher and then comes down until it hits me and then takes profit. These are limit orders because they are reversals. Now, let's say I thought price was going to bust through a level and continue. What would that look like? Well, I would have to come up here, and because price doesn't exactly work that way to give you stop orders, I would have to come up here and get a stop order, which would be a buy, right? And then my buy order would be right there, and maybe I think stop loss here, and I think that price is going to go way up here, and so it's going to give me a stop, which means that price is going to bust through what I have chosen as my entry and then continue on. Right? Easy enough, right? So that is going to be your markets, limits, and stop orders based off of your entries. And that's going to be it for our second video. Thank you so much for tuning in. Please feel free to like and subscribe if you enjoy the content, and stay tuned for our next episode next week, which is going to talk quite a bit about the small details within price that can help you to capitalize on taking these buys, sells, longs, and shorts, and how we can hopefully start to understand how you can make money in the market. Thank you so much, and I'll catch you in the next episode.